Blockchain technology and digital assets are not only here to stay, but are also disrupting how things have been done so far. And traditional financial firms now want a share of this new ecosystem.
Financial services and banks in particular, we're going to have to do a better job of fulfilling societal expectations of them, meaning serving clients the way they need to be served, the way they want to be served, and moving into the future to not just cope with the future and technological disruption, but really thrive in it.
But there are gaps in the crypto architecture that's holding back institutions. So what are the bridges that need to be built to leapfrog us into the next level? Coming up on Word on the Block, Alex Mansion, head of SC Ventures, joins us to dive deep into those topics and a whole lot more. There is no escaping the fact that blockchain technology is transforming the world of money, one protocol at a time. But how are traditional finance giants getting into the game? You know things are getting serious when institutions, including those that have been around since, the 19th century, are starting to back ventures that are disrupting how we invest and work in the 21st century. And that's what one global institution is doing, one venture deal at a time. And today we sit down with a veteran leading the charge. Welcome to Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forecast News. I'm Forecast Editor-in-Chief Angie Lau. And today I'm excited to tell you we are in conversation with Alex Mansion, who heads SC Ventures at Standard Chartered to lead innovation in intrapreneurship at the bank, and also looks to invest in fintech companies that is changing the way banking will be done. Alex, it's great to have you on the show.
Thank you, Angie. Nice joining. Thanks for having me.
All right, so Standard Chartered, this is one of the world's oldest legacy banks. I think it was back in the 60s, was it? Where it was the merger of two older banks back in the UK. And here we are.
You're absolutely right. It obtained a charter from Queen Victoria in 1853 and established the first branch in Calcutta, followed by China, and merged with another bank in Africa, which was established in 1862, started with sheep, gold, diamonds, and Southern Africa, generally speaking.
From what we traditionally know as commodities, now evolving into this 21st century. And so how do you think about crypto? How do you think about these new digital assets that are available because of blockchain?
Well, see, we just talked about the discovery of new assets and years of legacy, which makes it a great platform in terms of operating in a number of parts of the world where it's sometimes difficult to operate as a separate matter. But this is where we are, and yet the conviction we started SC Ventures with is that financial services and banks in particular, we're going to have to do a better job of fulfilling societal expectations of them, meaning serving clients the way they need to be served, the way they want to be served, and moving into the future to not just cope with the future and technological disruption, but really thrive in it. So, blockchain, digital assets is a subset of that conviction. I think of blockchain as a foundational technology for a lot of different things, which will become very seamless over time. And we think of digital assets as a new asset class, which is just here to stay. It will become an integral part of our lives. And therefore, we have a very important job to do in terms of enabling it and building and maintaining the infrastructure for it.
When was that realization, that aha moment where it was a recognition that this is disruptive and it could disrupt us? So either ignore it at our peril or figure it out. When was that moment?
I'll get back to the question about when, but I would just note that disruptive has a negative connotation to it, meaning it's bad for you. And my instinct in the context of banking is actually quite the opposite. It's very, very good. I was running one of the business units of the bank, the transaction bank, and at this point we were running a nice, stable business, or so I thought, but unsustainable in many ways and had to be revamped in many ways, and that's where we as a group of professionals just became exposed to so-called technological disruption with blockchain emerging, as well as data science, AI, and a number of other trends. And so we started applying these things within the bank. We did proofs of concept. We engaged with fintechs. We really became intellectually curious about it, and also came to the conclusion that changing the bank just from within the bank was going to be really difficult. So we acquired the conviction that in order to transform banking, our bank, but generally speaking banking, we're going to have to do a combination of doing work inside the financial institutions, but also outside, and build ventures with business models that are fundamentally different from the business models of conventional organizations. And so this is how the idea for SC Ventures was born, setting up independent business models and beginning to get serious about it.
I mean, I get that. I think a lot of people get that sometimes when you are so close to the issue at hand or the business at hand or the model at hand, you can't see beyond what's staring you in the face. How did that evolution take place internally, and accepting that crypto and digital assets and blockchain was something that you wanted to engage in?
I think that the quick answer, the simple answer to your question is it's about clients. It's about clients and listening to clients and listening to their needs and listening to what society, generally speaking, but specifically the people you're involved with, all your stakeholders are telling you. The banks historically have been pioneering. They've been audacious. They take risks. We were reflecting on the legacy of Standard Chartered, from in the 1800 something, and building economies and supporting development, etc. It's the DNA of banking. However, in following the financial crisis, where a lot of financial institutions kind of lost the plot, there was an element of remediation. There was an element of reviewing the way we conduct business, which was really important, and frankly wouldn't have a right to exist if it weren't for that. There was an element of becoming accordingly very risk averse and process oriented and internally focused, and perhaps paying less attention to what stakeholders, clients specifically, are telling us. So it's a long-winded way of saying, if you listen to clients, right, they were telling us things. We'd like you to do this for us. Clients were asking us about digital assets. This is an emerging asset class. What are the possibilities? What could we do with them? By the way, institutional class, can we trade them? Can we keep them? And there was just an element of being aware of these requests and needs, the emerging needs or very real needs already, and trying to address them. So that is the basis of banking, frankly, any service business, generally speaking.
You're based in Singapore, very specifically. Does that have something to do with some of the directives from MAS, Monetary Authority of Singapore, the de facto central bank, some of the initiatives that they're doing in the crypto space?
In many ways, while we're headquartered in the UK, we think of Singapore as an operational headquarter as well, if you will, and we have constant dialogues with the MAS as well as a number of other regulators. But we weren't specifically driven by any regulatory regime in terms of setting up SC Ventures and the ventures that we had. In fact, reflecting on digital assets specifically, we incubated these ventures in Singapore and moved them later to London, not for regulatory reasons, but in order to be closer to the clients which we wanted to service, as we were focusing on the institutional space, at least initially. Generally speaking, I would also add that all regulators around the planet are learning, dealing with the subject. And learning, I don't mean this in a condescending way at all, because we are all learning. We are all sort of discovering new things as literally as we speak. And a number of frameworks are emerging, and I expect they will converge over time, and that we'll have pretty consistent regulatory regimes around the world for a new asset class and the way to operate it.
Well, two very interesting hotspots almost. Singapore, Asia being one, obviously, but London increasingly with its deep interests in the digital asset space and wanting to really create an environment that supports those innovations. When you look at SC Ventures and you look out into this environment, how do you think about the joint ventures that you have? I note that you just collaborated with BC Group in the digital assets and blockchain space with Zodia Markets. Is this a international play?
So two things. First, where are the ventures which we're building? We're headquartered in Singapore, but the ventures are all across our footprint. So the question I'd ask myself is, do we have a competitive advantage? Do we have the right to win? And does our DNA play a role in this? How to do this, and that's a competitive advantage that outweighs the cost of perhaps never taking a shortcut because we're backed by a regulated financial institution, and that's a positive differentiation in my mind. So the ventures accordingly are a little everywhere. The joint ventures and the partners, back to point of principle, is there's virtually nothing we really want to do by ourselves. Everything is in partnership. When we initiate the venture, we may own 100% on day one, but sooner rather than later, we are going to want to have partners in it to help us scale it, bring additional expertise, validate the commercial proposition, validate the financial proposition as investors. So we want partners one way or another. And pretty much all the ventures we incubate at some point welcome partners. So Zodiac Custody, which is the other one in the digital asset space, welcome Northern Trust, and Northern Trust is our joint venture partner in this venture at the moment. And Zodiac Custody is now registered with the FCA, also in Ireland, so in Europe, and is operating. And in the case of Zodia Markets, you're right. We partner with BC Group in Hong Kong, which is again a partner we've been in touch with for a long time. And generally speaking, we will want partners in any event. And generally speaking, we're just very, very open to engaging partnerships. And if every dialogue is worth having, and if something comes out of it, then and we can add value together. And ideally, we add more value being two or three or four partners as opposed to just by ourselves. Then that's the objective.
The objective is a big one. The goals are great. The question is, will this pave the way for more institutional dollars coming in? And what about data privacy? So many more questions to ask you, Alex. Hang on. We're going to take a quick break. When we come back, we're going to talk about all of that and also the onus on financial institutions to keep our individual personal details safe in this digital age when we come back. After the break, evolution of banks in Web3.
The future of financial institutions is in part to sort of diversify from just money to data and be the right custodian for data.
And later, could the crypto winter turn out to be a good thing when word on the block returns?
If you don't understand the future, you'll never see your place in it. Introducing Forecast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forecast Plus.
Welcome back to Word on the Block. We are in conversation with Alex Manson, head of SC Ventures. And the question is, you're creating these really new rails and these new platforms to create, in your words, value for the client. Does that mean we're going to see more institutional clients come into this space? Are those dollars ready to be invested into crypto, into blockchain, into Web3?
So it's a super important point, and I think you're putting your finger on our investment thesis when it comes to digital assets venture specifically. And the thesis is that one, digital assets are here to stay. I'm not saying Bitcoin's going up or down, doesn't really matter. I'm not even saying that Bitcoin's here to stay. I think it is, but it kind of doesn't matter. All I'm saying is digital assets are here to stay. The second point is, therefore, institutional adoption is inevitable. However, for institutional adoption to occur, the infrastructure has to be at institutional grade. And this isn't the case today. So when we first wanted to explore the asset class and trade it, the first question we ask ourselves, so where do we put it? And it's a very real question. Where do I put the Bitcoins, the keys? And we looked around and found a number of startups, some of them very well-funded startups, but still startups, and importantly without the operating experience and the governance framework of an institutional custodian. So we parked the idea of trading and started building a custodian at institutional or bank grade, which is Zodiac Custody, on the back of which Zodiac Markets is a brokerage and exchange platform, again targeted to the institutional market. So go back to your question. Not only does it pave the way for it, it is a necessary condition for institutional adoption. We are absolutely sure that institutional adoption is inevitable, but somebody has to build a robust, safe, compliant infrastructure for it. That's exactly what we do.
When you say institutional grade, what is missing? And I understand that the custody space, but the compliance space remains so complex because the regulatory and policy space remains evolving. It's ever changing.
Sure, but that is the case in financial markets generally speaking, and all financial institutions have to adapt to an evolving regulatory environment. That's the story of our lives. So, for example, segregation of what I call segregation of church and state. The exchange shouldn't be the same as the custodian, shouldn't be the same as the settlement agent. In the retail digital assets market today, this is amalgamated, right? The same firms do it all together, and that's a big no-no for institutions. Just as an example, just managing keys in hardware security modules is, by the way, easier said than done, and very important. But there's other things, right? How about white labeling? How about implementation of travel rules? How about fraud management? How about all the things that you would expect in terms of conventional securities? And then there's more, because we're in digital assets. But the principles of institutional business, be it custody or brokerage and trading, have to apply for institutions to ultimately pour into the sector, which they will.
Yeah, and look, it's new space, and to your point about in the retail crypto exchange market, a lot of these things are conflated in the same space, and then there's a hack. And then there's risk mitigation that could have been had, but wasn't applied. How do you think about user protection? How do you think about it in the age of digital privacy, user protection, data protection? You don't want this in the wrong hands of the wrong people.
We're seeing, for example, in the metaverse, and how we protect our identity in the context of Web3. And at some point we will protect our avatars perhaps even better than we want to protect ourselves. But before we get there, you call that avatar singularity, if you will. But before we even get there, an element of controlling identity is absolutely important. Look, banks historically are here about trust, right? You trust me with your money. your money is pretty important. It can become very emotional, and so we used to put it in a vault, and then it became more virtual, more digital. We are rediscovering vaults, by the way, in the context of digital assets, because there's a key, and that key has to be physically somewhere. It's called hardware security module. But that aside, you're trusting us with important things, and we have to take good care of them. And I think that the future of financial institutions is in part to sort of diversify from just money to data, and be the right custodian for data. And here I would have thought, we have not only a right to play, but a duty to really get it right. Apply that DNA of operating in a hyper-regulated environment and so forth, and keep customers' data not only safe, but really ensure that they never get broken into, and also put them to good use, which is what people will expect from us. Over time, if you trust me with your money and financial data, maybe you will trust financial institutions with other data around health, for example, or identity, as we just discussed, and that is potentially the role that financial institutions can play. Is another area where we apply the same standards and rules as a regulated organization. And I do think this is a differentiation versus fintech or tech new entrants who are very capable in a number of things, and we partner with them all the time, but may not know what they don't know in the context of regulations, and that's important too.
I'm so intrigued by this concept, and I want to dive deeper into this that you raised, which is, if the future is about digital assets, today we define this as the digital version of money. But if our data itself becomes a future commodity, what is really the definition of a bank in the future? Hang on to that thought. We're going to take a break, and we'll be back in just a moment. On the other side, diving into SC Ventures' shopping basket. More when we come back. You said something really interesting, which was, in the future, if you are in the custodian business of digital assets, and some of the valued things could be our health information, our consumer behavior, all of the things that are being monetized, whether we like it or not right now in the Web 2 world. The Web 3 world really allows us as individuals to seize that power back using blockchain and decentralized technologies to actually monetize that for ourselves. How in that future do you define a bank?
Banks are institutions relying to some extent on trust, and therefore with the job of preservation, originally wealth preservation, as well as growing wealth and supporting growth. So the question is what form does it take in the context of Web3 and digital assets? And but if we go back to the basics of what I've just said, in my mind, it's about banks setting themselves up to be able to fulfill these functions. So keeping data and keeping data safe and using it for good purpose is an integral part of growing wealth or enabling growth, as the case may be. Over time, I would have thought that where people seize control back, as you said, of their identity and the destiny in Web3. I would have thought that the transactions within Web3 are going to be quite central to the architecture, right? So the way we pay money to each other, the way we finance each other, the way we protect ourselves, etc., is going to be quite central. And so I would expect finance to be a very central theme in Web3, perhaps unlike Web2, where notably in proverbially, so sort of, we forgot money on the internet, at inception. Very unlikely to happen in the context of the next generation in Web3. So the building this infrastructure, operating this infrastructure, I think is a critical element of what banks will be expected to do by Web3 users and society at large.
You've already invested in Ripple, so we know Ripple, in Medico, which provides security, critical digital asset infra. What's next on the acquisition list? When you build out the infrastructure and the architecture, what else is on that shopping list?
So maybe a generic point first, which is we're building an ecosystem. The conviction here is that ecosystems with today's technology are more powerful than buying, integrating. Ecosystem is an API plug. I can plug a capability into a platform, or the other way around. It's very quick, it's very nimble, whereas just buying things, integrating them has a whole, it's clunkier and has integration risks with it. So building ecosystems is the way to go. And so the various ventures we're building will form an ecosystem. Obviously, there's a connectivity between Zodia Custody, Zodia Markets, because they're in the digital assets business, fulfilling very different roles, but they can plug into each other. Metaco is a critical technology vendor to Zodia, and so we took a stake in it, and they're great partners and doing a great job as a separate matter. So that's their part of our ecosystem. So are other investments we're making. So in terms of predicting what we'll do next in that ecosystem, well, what are we missing? Settlement is going to be pretty important. Tokenization of assets is going to be pretty important. We will tokenize securities, almost certainly. We will tokenize real assets, almost certainly. We will do all these things in the context of a broader ecosystem of serving the digital asset economy as a general matter.
And so it goes back to, do you care that it's crypto winter right now? Do your clients care it's crypto winter right now?
So first, do I care? Yes, because I look at the market and I'm very sorry that a number of people got very hurt, my observation being an element which I hope doesn't sound like Schadenfreude, but I told you so, could have told you that, right? But also, no asset class ever goes up forever. That doesn't exist. Asset classes, in order to be asset classes, have to go up and down. And the fact that we are going through a winter now, and digital assets obviously are still here. And by the way, there's been bubbles and bursts before. So we've gone through a few cycles in the context of cryptocurrency specifically, is a sign of resilience and a sign that the asset class is actually here to stay. So from an institutional perspective, it's actually encouraging and good thing.
Well, the ideas are here, the innovation is here, and increasingly to see more traditional finance taking really a very specific view with a lot of conviction on building a future ecosystem that is based on decentralized blockchain technology or any version in between. That alone is a huge signal for the maturity and the maturing aspects of this space. Alex, it was great. It was great to hear all of it from you. It was a pleasure talking to you today.
Oh, thank you, Angie. Thank you. That was great. Appreciate it.
And I want to thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Angie Lau, Forecast Editor-in-Chief. Until the next time.